Hey, everybody, welcome back to the Investor Master Series. Mike Fairborn sitting in for James Boyd, who is out on the day, but will be back tomorrow for the remainder of his classes. And just wanted to state, welcome to all of you today, folks. I really want to take a look at current market conditions and taking a look at where the S&P 500 has been at specifically. It has been range bound, and that range can mean everything to an upside move or a downside move because prices have kind of been coiling up a little bit. And when you see that price compression, you can see some breakouts in either direction. So did want to take a look at an indicator today that could really help us spot maybe some stocks that are setting up that might be in a similar type condition with the market. So tied in with market conditions. So I'll look forward to going through that with you all today. Folks, I'm joined in the chat by a good friend and colleague of mine, Barb Armstrong. You see him in the you see her in the chat as Barb. I would like to welcome all of you. Hello to you, Josh, Gary, Riceberg, Ray, and others. Great to have you all on board. Life in the Fast Lane. Grace, Will, Michael, and Wrong. Hey, folks, any questions, comments you have, throw those in the chat so we can help address those for you. It's great to have Barb here to help us in that regard, but I'll try to keep an eye on those as well. So with that, let's turn it over to some disclosures to get going here. Okay, as it states here, the information here is for general information purposes only. It should not be considered an individualized recommendation. People running software application, also for educational purposes only. Now, investing does involve risk, including the loss of principal. There's some additional points listed there down below. Past performance is no guarantee of future results. Finally, there's no guarantee that the execution of a stop order will be at or near the stop price. And with a limit order, you might risk missing the market altogether. In a fast-moving market, it may be impossible to execute an order at the stop limit price or better, so you might not have the protection you sought. So just a quick look there. Also a quick comment on the risk of REITs. Risk of REITs are similar to those associated with direct ownership of real estate. Okay. Well, turning on over into the markets here. Here we go. And that's a good look at the S&P 500, folks, bouncing right down towards the bottom end of our range right now. As you can all see, it's been a tight range. Now, it's been a little bit different with the equal weighted index. I'll take a look at that in just a second here. But you'll notice one key thing I do have over here. I have a couple of lines over here to kind of help indicate for me, what direction the market might be heading out of this range. Now, those are, in fact, alerts that I have drawn up here. Just a quick note on alerts, because I did pull them up here. I did happen to have them on here. The alerts aren't guaranteed. They're not guaranteed to be delivered at any specific speed or time frame, and should not be used as a replacement for actively being aware of your positions. I have not had any issues with alerts myself, but I didn't need to state that disclosure there on alerts. But you can see right there, I am notified either way, and actually we came right down to it. This has been in place for over a week now, and we came very, very close to that point. We did not break below it yet. I put those alerts on simply by right-clicking on the chart, going down here to create alert, and at or above, at or below, and then I had it actually text me a note, trading lower, below the low range. You have to set those up. By the way, if you did want to get this sent to your phone, very, very important down below, this notify with, folks, you've got to have it selected as send push notifications to mobile devices, okay? And to get that set up, as many of you already are aware, but those of you that don't, just to let you know, set up top, application settings, and then notifications right there. You click on that. You can put in your email and your text as well, or your phone, cell phone, with some disclosures behind it as you put it in. Okay, so that's a key point. And you'll notice we are in a very, very tight range over here. Now, what's so fascinating here is we are so close to all-time highs. Yet, we've had a big run, and if we begin to break below this level, we've been in this range for so long now, and actually that is the before Halloween, actually, into that range. So we've been sideways, actually, since that time, at least for the high level. But for the low range, about an equal amount of time, we've been here month after month after month, 4 months now. So if we begin to break this, yeah, it could cause some concern because we don't know exactly what may happen with share prices, right? I mean, I should say with the index itself and all the stocks within the S&P, they might be, obviously negative. A broad number of them, of several, could be clearly affected to the downside here. So keeping an eye on this, and can we get above that major level at 7,000 here? These are all key points, to keep in mind as we're tracking this. But as the market is going sideways here and watching it, we have a fair number of stocks in the S&P 500 doing the same thing. Now, some of these companies have already broken out and begun to stretch up a little bit higher and maybe are even resting on some of these prior highs, and they might be best suited for a move to the upside, even, or I should say, despite the market even maybe showing some weakness. I mean, it could, the market could still test down to lower levels and we'd still be in like a longer term range, right? That could still be considered a longer term sideways channel. But really watching the market at these points can be effective and useful for us. And folks, I wanted to take a look at an indicator today. I talked about it a little bit last week, but looking into it even more, there are quite a few scenarios and setups where the TTM squeeze, and I'm going to break this down here for you real quick, but we're going to go into an updated scan that I've created on this as well in ThinkScript. I'll share with that in just a second. But what I want to do first off is just pull up the squeeze. I'm going to take out the show plot, and we're going to click OK here. So we're just looking at the volume, and we've been in the squeeze. Now, this represents an unusually high level of price compression. That almost sounds contrary, right? A high level of price compression, but it's this sideways channel that we've been in. We've had very, very little price movement relative to what the market is normally set to do. Okay. And that's where you're seeing this turn from green to red. Now, what this indicates here for us are a couple of different things. And I'm going to put these right on the chart so you can see them. It is actually one of the metrics that many of you may have looked at before. This is the Bollinger Band. And the Bollinger Band, referencing standard deviations and changes within price. You can see the Bollinger Bands right there. You get the mid-range here, and you got a standard deviation extension above or below. Now, to get the TTM squeeze to occur, we actually have one additional indicator. So it's made up of two indicators. The next one is the Keltner channel. Another metric, it does not use, it uses moving averages and displacements off those moving averages. It doesn't use standard deviations like specifically, but what's going on with it is I just run the Keltner channel. There's a lot of different lines here, but if you caught the Bollinger Bands, when the Bollinger Band tightens or gets into what they refer to as a squeeze range, oftentimes prices will break out. Same holds true with the Keltner channel. Now, what makes the TTM squeeze unique right down here is that we're talking about when the Bollinger Band trades within the Keltner channel, and it is right here. In fact, that is the Bollinger Band. And that is the Bollinger Band. And on the outside, you have the two Keltner channels, K and K. Both of these indicators look for price compression with the understanding through the eyes of a lot of traders that you're going to get a break out of that compression. Folks, it reminds me a lot of this. If I talk about price patterns, because I do a lot of this in my other classes I teach, a triangle, a symmetrical triangle, you have price compression. And what is kind of the theory behind, or what traders look for in terms of a price pattern? They look for a breakout that extends the biggest length of the range, minimum. So they're looking for a breakout here or a breakdown here. Okay. This is what we're saying here when we're talking about the Bollinger Bands, the Keltner channels. When one even shrinks below the other, it's a very, very rare event. But if it happens for days on end over here, it's setting up for what could be a rather large explosive type move, one way or the other. Now, one thing that traders will do is they will often look for the direction of the trend first. In terms of finding direction, what's the direction of the trend? Well, we've been up, and if I was looking at this on a weekly chart, this would look a lot like a weekly type flag sort of pattern, right? And so anticipation would be to the upside. But that's just with the trend. Other things can pull us down too. Say, for example, the VIX. If the VIX itself starts to break above, goes greater than 20, 20 being a bigger number there, well, that could signify if we start to see a break here, the VIX above 20, well, you might see, that's when prices in the S&P 500 tend to spike a little bit, and that would be generally spiked to the downside. Let me take these off now because we've already got them in place. But I'm really just trying to, many of you may have heard this before, but the whole concept today, or the whole idea, is just to focus on current market conditions and what to track next. Okay, regardless, based upon what we're seeing here, up or down, it could be an extended kind of type move. So we'll see about that. A quick note, and I know James likes to look at this too, I do as well, but this is the SPX EW. Now, this is market breadth in the market. So market breadth, and that is just the extent of all of the companies. What is the breadth of the S&P 500 if everything is equal weighted is the only way to really mention that. It's an equal weighted index. Everything accounts for the same. In other words, we don't have the Mag 7 that's heavily weighted in influencing the S&P 500. So breadth of the market strong, clearly higher highs and higher. This is the S&P 500, same set of companies. It's just that it's equal weighted. Look at this, higher highs and higher lows, resting on prior highs. All else equal, through the eyes of a trader, that's a positive. That would be another sort of an indication of the possible breakout scenario to the upside, because market breadth, to get long-term trends to continue on up for extended periods of time, oftentimes you'll need breadth of the market to do that. The mass number of companies doing it. By the way, look over here with me. Do you see this? We went into the TTM squeeze for at least about that's about 6 days or so. Right there. Looks a lot like a bull flag, doesn't it? So these two can correlate, and that is your follow-through rally right there, right? Like a flag pattern. You can kind of see it right there. So these can also be indicative of a potential flag pattern or a price pattern unfolding as well, because you're getting that price compression. But again, the key thing is what else is happening? What does the trend look like? What do other indicators look like as well? Quick note on the SPXEW, that's just like seeing every one of these as the same size box, not these massive Mag 7s here sticking out, okay? So that is what I'm going to look at today, because we're positioning ourselves for kind of a move. Now, quick note, just super quick on the VIX. Where's the VIX at? Is the VIX holding above 20 right now? Yes. So it's coming down today a little bit, but each of those conditions in terms of the S&P 500, wow. I mean, it's really kind of holding its cards here. A great way to look at this, and I showed this in my Friday class, but this is just, I mean, if we're looking at the market right now for current conditions, this can be quite helpful to get a general sense of where we might be, some indications of where we might be headed next. I'm throwing on a comparative line of the S&P 500 right here. You can see the correlation, and you'll notice that when we do get above maybe something like a 20, not to say that this can't shift over time, but you notice if you get the 20s over here, if you do get above the 20, you see the spike in the VIX. You get a pullback in the market, a spike in the VIX over above that 20. There's the pullback in the market. Purple line again, right here, S&P 500. Over here again, yeah, we're getting above here, and these were the bigger moves to the bottom of the channel. The 20, the bigger moves. A little bit bigger move here. Now the question is will it break that channel line? And if you start to see that VIX just kind of inch up, that could be interesting. What's interesting too is the VIX is also in a TTM squeeze. But I mean, it's setting up for a move. So we'll just have to see how that does unfold here. All right. So with that said, I want to take a look at individual companies here. Oh, let's take off that comparison real quick. See how we're doing here in the chat. All right, excellent. And by the way, yes, you could follow us on X. Thanks, Barb, for posting that. Barb Armstrong CS, she posts some great content there. I try to post content as well on mine, Mike Fairborn CS. I'd love to have you guys follow us on X, and Barb's posted that right into the chat. Okay, perfect. I think we're all set. So let's dive into it. Now, how we scan in here can really kind of depend on what we're doing. This is one I just created. It's the most simplified one using both Bollinger Bands and Keltner Channel to try to find some of these companies that are also in a sideways range in anticipation of markets maybe breaking higher as well. Now, I've scanned through, and I've noticed right now, keynote here, I am in the scan tab, and I am in the stock hacker right now. So you got to be in that sub-tab stock hacker. Now, currently I'm scanning in the S&P 500. Folks, you don't need to scan in this if you don't want to. It's an easy scan for me because a lot of times we're getting liquidity numbers that we want. Maybe companies that are a little more established, right? They've been around for a little bit. I mean, they're on the S&P 500. So that might be a draw into what you want to scan into. Very, very important here. Some of you, though, might just say, listen, I'm going to alter this scan a little bit. In fact, what I'm going to do, I've got the scan in place, and I'm going to share that in just a second here. But if I come over here and I click on study, like right here, I can add in, say, for example, I'm sorry, not study. We'll just make it, I've got my study already. Let's just go into stock. And we could say something like, I'm looking for companies that are only, well, let's say they're a minimum of $5, and maybe there's a range, maybe up to, well, you know what, I'm just going to say $10. $10 because you're looking at this and you're saying a $10 range up to maybe 300, something along these lines. It could be even more, but you can see you've narrowed your matches down, even in the S&P 500. Now, I could also put something in here too to narrow this down. I could go into, let's see, it could actually be, let's see, I think stock still has, no, it doesn't. It doesn't. I have this average volume down here, and I'm going to add that in. I think it is actually study. It is a study, isn't it? Yeah, I haven't used it for a little bit. I've just been creating some of the codes. But if you come over here under study, you can actually also set, there's some really good criteria to select, like average volume, already pre-built in. So, it's got over, I'll just say 250, well, we could say 500,000 shares on average minimum, bare minimum. It can be higher, but average volume, okay? And then from this, I could scan out a larger basket of stocks. For example, I could go, instead of the S&P 500, I could scan for, say, for example, the Russell 1000. And you say, what is that? Well, the Russell 1000, I believe, has still many, vast majority of the S&P 500 in it, but it's also got like several large cap stocks. You could do that one. You could also do, if you wanted to look at all stocks, because you've already made some price and volume reductions or filters here, you could just say category, all stocks, and search that way as well. So I'm just saying there's a lot more you can do to find what you're after if you wanted to expand it beyond the S&P 500. Now, having said that, we are just going to look at the S&P 500, but I wanted to just highlight that. So I'm going to scan, pull it up right now. And it might, gosh, normally it popped up. I just wanted to rescan it again to see what else we would have there. But yeah, we'll share that scan right now while we're waiting. Here is the scan. And by the way, here is a look at the scan too. So it's very, very simple. It's very basic. I have it set so that I have a minimum scan bars. It has to be in the TTM squeeze for at least 3 bars. Three bars in total. So it can go back as far as you want. But you could say like 20 here. But 3 normally is what traders will look for. For some reason, I'm not getting any hits right now. That's too bad because that list was it. I don't know what's going on there. That's funny. But anyways, you could change that. But that's the bare minimum I have. You could see here an input and a number listed over here is in terms of the length and things that we've got here too. Let's try that one more time. I don't know why it didn't go, but the good thing is I did look at it already. I've looked at some of the stocks. That's crazy. It's not working right now, but this does work. Let's share it. Here is the share of the scan. And a quick note on this scan, everybody, is that it is not guaranteed for timeliness or accuracy. That's the ThinkScripts themselves. Okay. Just as a heads up there. Okay. And I wanted to note that because, as long as the data, though, is flowing into the platform is good data, and it is good data that I've experienced, then they should work mathematically. But just this is a quick note, not guaranteed for timeliness or accuracy. That's so funny that it didn't. By the way, folks, about 53 come up. I just wanted to see if there was any new ones that came up. And the good news is well, I'm going to actually let's yeah. Well, I'm going to show you what did pop up in the list. So the scan does work. And by the way, can anybody post it in your Thinkorswim platform and just make sure that it's working right now? It might be that Thinkorswim is down. That's a very rare event, but it might have happened. That could be the case. Okay. Let's do this. Let's see. I want to just show you what else popped up. So I wanted to look at this one popped up in the S&P 500. You can see it over here. Folks, we've been in the TTM squeeze for a long, long time. In fact, we've been in the TTM squeeze for about, this is a rare event. This is the one that has the most that I saw out there. Reggie, thank you. It is working. Appreciate it. Yeah, it just doesn't work when I do it because I'm presenting, right? Why would it work now? So anyways, 39 bars we've been in a compression. Bollinger Band within the Keltner channel, 39 days. You can see, have we had a big run up here? What it's telling us behind the scenes is there's an extreme level of price compression, even over earnings. So if you lump all this together, it's really tight. Now, what is this set up for potentially? Do you guys see the possibility of a breakout? Would that be an interesting level, perhaps, for a breakout, being extended back all the way since November, for the possibility of a breakout? Okay, good. Thanks, all. Appreciate that. No results from me. Look, Kevin's got maybe in the same boat I'm in, but it is working. It just took a little bit. Okay, yeah, I think we might see some general slowness depending upon accounts, but it is working. It worked for me right before class, so I'm not sure. But the whole idea here, folks, is if this breakout occurs, we don't know, but from a technical perspective, it could be rather large. If it's to the up or the down, it could still be to the downside. But this is what traders will look for here. Yeah. Oh, 53. Perfect. You guys got it. And by the way, for those of you that are not familiar with this, just as a quick note, go up top into setup right here and come down and just click on open shared item. Post that link in here. And then what you're going to want to do, just like that, click on preview, name it what it is. That's the best way, the easiest way in the world to find it. TTM squeeze scan, for example, something like that. Import it. And then when you go into your scan tab, you can come over here, go into load, and you'll find it in your personal list. Okay? All right, just because everybody needs to know how to do it the first time. Okay, and Barb confirmed it as well. Thank you all. Letting us know that that works. Okay, so the whole idea here is, and by the way, mine just began working again. So I came back to it and it's up all of a sudden. So it took a while, but normally, honestly, this one, the first time I hit it, it was like a second or less. But as you can see right there, the time can vary. All right, folks. Well, if you're getting value out of this presentation, smash that like button. Let us know that you are liking this presentation, folks. Also, you can follow Barb and I on X. Here's something that I posted that might be of interest to you guys, ties into our discussion today a little bit. I posted this on X here, and this is just basically, the performance year to date that we've seen in our sector, the sectors out here, what's been performing. This was over the last week. So this can be helpful in sort of understanding sector rotation at different times. I'll post this link down here if you guys want to take a look at this or others. Be sure again to follow Barb Armstrong CS as well. All right, that is what I had there. Now we have to continue on with a few different items. So let's do this. What I want to do is go in here and just emphasize what this means again. When we see the TTM squeeze, we're seeing unusual, sort of rare, much more rare in terms of Bollinger Band or Keltner channel setups in terms of reduction in price volatility, which over the same time frame, because the market is doing the same thing, both could influence a rather large move. And we're looking maybe on the right side, I should say, I'm sorry, the upside or the downside, whichever one that is you're looking for the bigger move could occur. And so as we come back to it, and mine's not popping up, there we go. I want to show you some others in here. So let's say, so you've got some of the semiconductors up top as well. NXPI. Okay, this is one of those in the semiconductor group. Now, it is not done what the NASDAQ has done, which is this. It is held up, it's remained stronger. And if you look closely at this, we had a fair level of resistance right through there. Trying to draw a straight line, guys. I'm not readjusting to it, but it's about 240. And you can see us break above, and now what are we doing? We are holding. We didn't do that here, not there, not even close there, not here, not here, but now, and there's your TTM squeeze. So again, we're looking for, what is it, folks? It's the magnitude of the move. This shows us a little bit more than the others, but it's still TTM. And look what it just happened. It just barely turned to green. That's funny. As we were talking about it, right? Am I hallucinating? Or did that just happen? I think it just flipped to green right there. Now, when it goes to green, what the indicator tells us is it could be on the verge of expansion. Now, it just flipped, so it could flip back too, because we're on the same day. But that's a lot of times what you can get when you get that compression. Okay, you get the move. In fact, here was a compression range right in here. Even this went to the downside fairly sharply. Do you see it coming out of the green right there? Into the green, I should say. Coming out and into the green. But you're not looking for 2 days, 1 day, 2 days, 1 day, 1 day, 1 day. You're looking for an extended move. And then you start looking for the lows or the highs. In this case, God, I cannot draw that straight with this new mouse. But you start to break that low. There could, in fact, be a magnitude price extension. In this case, folks, what was the trend doing? In my book, that's down. Lower lows, lower highs, boom, right there. Okay, that's what they're looking for. Now, the cool thing here is we're actually on the upside and we're holding a range. As a matter of fact, let's do this. Just as an example trade here. I'm going to come over here. I'm going to go ahead and go into our trade tab. We'll just do an example trade here. In fact, what we'll do is we'll set up our potential exit here. We mentioned our stops earlier in our disclosures, but like right down below these lows, right? Because maybe we don't want to risk too much, but then the upward move would be like this into the flag pattern. Now, this is a T1 price extension right there. That's a T1. That's the target 1 to the high. The target 2 is this entire move up here. Does that seem out of the realm of possibility when we're also dealing with, what's the whole basis here, folks? TTM squeeze. A bigger move? It just went back to red. Like I said, we're still in, it's still showing price compression, but price-wise, you've got a range over here. We broke above and now we're sitting there. Sitting there. So let's put one in here. I'm going to kind of estimate this to be, in fact, I don't have to estimate it too much. I go into more detail in my swing trade class in terms of price projections on these flag patterns, which is what we do a lot of. But I'm going to say somewhere around 280-ish, okay? And that's a really decent reward-risk ratio, right? Potential reward, potential risk. I mean, in red down here, that might be your risk. I'll just go ahead and choose a different color for the upside potential. First of all, there's 1 and there's 2 for a T1. It might even be a reward to risk ratio. If we're talking about reward first, a 2 to 1 under these scenarios, or much more, much higher magnitude if we get a magnitude of a price move in terms of a risk reward if we get the full extension of the price pattern up. All right, but this is behind the scenes. Is there going to be some force in a move here or not, is what the TTM tries to tell us. Let's get into it right now. By custom OCO bracket order, I'm going to set these off first. Good till cancel, good till cancel. Folks, let's just do 50. It's kind of an expensive stock. You might even want to do 25 shares. I'm going to go ahead and just do 50 shares here. Tab through it, make sure we've got everything set up. So for our limits and our stops over here as well. Let's go ahead and set this up. That's a much higher range, right? 280. You can look down here, but this was about let's see, 230, 236, 236. We'll see it on the chart here. Go ahead and click on confirm, and then make sure everything is what we're looking for. I'll go ahead and send that through. There's our fill. Okay, so there, right there. Yeah, we were pretty close to it, but there's a general idea on that stop and that target right there. All right, folks. Now, just as a side note, if you want to get in more detail in terms of the projections and entry points, because we do add to the TTM squeeze quite a bit in our swing trade, the swing trade class. I've got over here on later today, actually. Yeah, it's Tuesday. It's not Monday, is it? That's Tuesday. I was going to say on Tuesday, and that happens to be today. It's coming right up after this. But yeah, so we have this class here. By the way, you can get into any of these playlists by clicking on here. You've got some great stuff in here. Barb teaches a lot of great classes. The one I did last week was just higher probability swings, really trying to build in some of that, those indicators to kind of help us along the way. I'll go ahead and just put this link in if anybody's interested in it. You guys can check it out. But this is just for the whole group. But yeah, this is where you can find a lot of great material from the coaches we have here as well. But yeah, there's ways to search for it. You can also search for like swing trading over here too, and post that in. But I'll just throw that in the chat. If you guys want to check it out, there it is right there. And actually, let me just do this. Instead of a specific class, I'll just send this link out. All right. Okay. All right. So on that note, that's our first one, and we've got to take a look at it. But the beautiful thing is, this doesn't happen very often. Why are we getting so many hits here? It's hard to get this many in the S&P 500. It's like 10% of the index are doing it. Folks, let me tell you why. Because I think this is why. I think it would definitely lead to being as to why. That is, we looked at it initially, and that is right here. You guys can visually see it. The S&P 500 itself is in a TTM squeeze. So again, today is all about, as we're looking at Investing Master Series, what is happening in the market right now and what tools can we use around that to help us along the way. So let's continue on here. Now, if we go through this list, we will find also there are some other, let's just use something totally different. Biotech, AbbVie over here. Stryker as well. Let's take a look at SYK too, but AbbVie first. So a dividend aristocrat, been raising dividends for at least 25 consecutive years, each and every year consecutively. It's one of those companies like Bristol Myers. By the way, dividends aren't guaranteed. They can be cut at any time, but traders will look for companies that consistently can increase those dividends over periods of time. This is interesting. Actually, I chose AbbVie because I was looking at this recently in one of the classes. You can see there's a lot of touches on that trend line there. And wait, by the way, we just broke that trend line. We are still, though, in a TTM squeeze. Now, additional confirmations that the traders might look at as they're, if they're using the TTM squeeze, some traders will say this is a confirmation. Or an additional sign is probably the best way to say it. If you start to get it to turn green, right? That's the additional sign here. But right now, from a technical perspective, you guys could probably see here with me, long term, it kind of looks like a little bit of an extended flag pattern, does it not? Probably a weekly type flag pattern. In fact, we'll just do this real quick. I've got a weekly set up here. I'll just show you. There you go. You see it? Up, down. I mean, just kind of imagine this is sort of a daily chart right now. What is the price doing? It's holding a lot of its gains. Big upward move, folks, holding gains, all else equal through the eyes of an investor or trader, could even be an investor. It's a longer term type move. They might see that as a positive. I mean, that's how bull flags or bull flag setups can oftentimes be viewed, right, through that lens as maybe position for strength. That's how some traders will look at it. That's why it's known as a flag pattern, a bullish pattern, oftentimes. Now, anything can happen, but we're also trying to use internal indications too. This is an internal indication of price behavior. So we're trying to add to that too a bit and say, if there's a big move, could there be a bigger move that could come into play here? Perhaps. We'll see. It's all based on price, though, what I'm looking at right now. But there you go. So, by the way, gosh, if this was a flag pattern, though, this is what that extension could be like. And there could be a couple of them. But you could say at least off that low to this high. Off this low, measured the same distance up here. Folks, you can see that's clearly north of where we're at right now. By the way, another indication that traders might be waiting for, though, I think you guys are saying it just as I'm saying it here. That, folks, in my mind, is resistance. That's longer term, longer term, longer term. Can it break out there? That's the question. All right, folks. By the way, one quick note on this. Be sure and give us a follow on Trader Talks as well. That Trader Talks channel. Love to have you guys on board here as well. But there we go. All right, folks, hit that like button if you're finding some use out of this. By the way, we will talk a little bit more about these concepts in the swing trade class, a little bit more in depth today, maybe using some different instruments as well. But just a heads up on that. Now, lastly, well, let's do one more. What's that SYK? Striker. Okay, so some of these may have been positioning for a little bit of a cup and handle, perhaps. We don't know if we'll see that. The good news is, folks, I've left you here today with a lot of companies you can take a look at and the scan itself to help you along the way. Now, one final thing before we're done. I have to state this because this scan was initially built, the concept for it. We built this down here, if you guys are interested, in this ThinkScript class. So the ThinkScript class that we do over here, we'll add different concepts and different indicators. In fact, we do take topic requests for this as well if you guys are looking for certain sorts of scans or whatever the case is. But it's really trading ThinkScript. A lot of great tools you get, and this was one of them that came out of this class, is actually the TTM Squeeze. So I'll put this down here as well if you guys want to check this out. We have quite a few classes in there. The last one we did was just on, well, what was it? Oh, yeah, finding and trading momentum stocks. So 3 simple scans for spotting momentum. I'll put that down in here. And this is Barb's already posted it. Thank you, Barb. Barb saving me some time. Appreciate it, Barb. I just feel like, hey, if you guys want more details on that, you can get it. Be sure to check out Barb's stuff. Got great stuff in there. She's got plenty of great classes, folks. But I've left you with this scan so you guys can have fun with this. Tie this in, though, to your price patterns, your setups, your trends, what you already think, or even fundamentals. What you think might be positioned for strength or weakness. Remember, this just says you're just looking for a magnitude move. And what we've talked about today is, could it break above resistance or break down below support, tied into a price pattern or whatever the case might be. So with that, thank you, Barb, for your help in the chat. It's been great seeing you guys. I'll check you out later if you're able to make it in our swing trading class. But on that note, everybody, have a fantastic rest of the day. See you next time.